Hi everyone, welcome to another Sharewise webinar. Today I am joined by Aroa Biosurgery, known on the ASX as ARX. I have the pleasure of being joined by Brian Ward, the Managing Director and CEO. Thank you so much, Brian, for joining me today.
Great, pleasure to be here.
So today Brian's going to give us a presentation and then we will move into Q&A. So for those that are joining us in the live webinar, you're more than welcome to pop your questions into the Q&A box down below. But with that being said, I'll hand it off to you, Brian.
Great, thank you. And thank you everybody for joining. I'm just going to go through a presentation and give you an overview of Aroa. Look, Aroa Bio, it's a well-established high-growth soft tissue regeneration company. We sell 4 families of products in the US, predominantly selling into hospitals. All of our existing products are based on our AROA ECM platform. The opportunity or the total addressable market for these products in the US alone is in excess of $3 billion. We sell through 2 commercial arrangements in the US. We have our own Aroa direct sales team, and then a commercial partnership with a NASDAQ-listed company called Bio. And I'll talk a little bit more about that further in the presentation. The technology is well established. We've had over 6 million patient treatments with our technology. So, substantial use in the US and a large body of scientific and clinical evidence that sits behind this. So, in excess of 70 publications. Our products are approved in the US, but then outside the US also in 50 countries. We have distribution arrangements in 15 countries. We also have been working on the development of a new technology platform that complements our existing product range, and that's our Nevo tissue apposition platform. In total, we're about 270 people. Of those, 80 or so based in the US, a team of 50 direct salespeople there, 8 inside salespeople, and then supporting logistics, medical affairs that are based in the US as well. So just briefly, in terms of the technology, essentially what we do is we isolate a specific layer of tissue from the forestomach of sheep. We purify that in a way that removes all of the components that the human body would react against, and we preserve the tissue framework or matrix of that tissue, and then all of the secondary molecules that are associated with that matrix that are important signals for healing. So this provides a scaffold for soft tissue regeneration. We then use that material to build a range of different products specifically designed for different types of wounds or different types of soft tissue reconstruction. So, for example, our Endoform products are just simply single sheets of our material. Very simple application. That's the first product that we started with. And then we've moved into more complex products. So Myriad is a multi-layer version of our AROA ECM designed for soft tissue reconstruction procedures in the operating room. So it has a very open structure about it that allows cells to move into it quickly and build new tissue. Symphony is a combination of our AROA ECM material and hyaluronic acid, designed for patients that have severely impaired healing. So the hyaluronic acid adds to the signals that we have naturally occurring within the material to really help facilitate healing. And then the Overtex products are a combination of our AROA ECM material and synthetic fibers, which are either resorbable or permanent, and they're there to provide much more load-bearing strength for uses in hernia and breast reconstruction. So just quickly, in terms of our financial results for the last financial year, our year closes off on 31st of March, so we did $69 million in total revenue, gross margin of 85%. We made a normalized EBITDA loss of $3 million. We ended the year with a strong cash balance of $29.5 million. So the company's going through a transition now, transitioning towards profitability and transitioning towards being cash flow positive. And I'll talk a little bit about that when we come to guidance for the coming year. Sales grew 12% year on year. That's really a function of two things. So our Myriad sales grew strongly, so over 70%. That's where most of our efforts going in terms of our direct sales team. TELA Bio has been responsible for about half of our sales. That business declined 7% last year, and that doesn't really reflect the growth in their business. So if you look at TELA Bio, their top line growth was over 40% last year. And so the difference between their growth rate and our growth rate has really been them managing down their stock levels, and so reducing the amount of stock that they hold, getting to a new level that makes sense for them going forward. So that's been an adjustment over the last year. We're now in a situation where OviTex sales of TELA and Aroa are much more closely aligned. So we'd expect to see OviTex sales for Aroa return back to where they've been previously and grow at the same sort of rate, so over 30% in the coming year. Endoform sales relatively flat, which is consistent with our guidance. So just in terms of the market potential, where we're focusing with Aroa's direct sales team, we started off when we launched Myriad. A lot of our procedures have been in lower limb salvage, and if you look at soft tissue reconstruction generally, it's about we estimate it's about a $700 million market in the US. Of that, limb salvage is about $225 million. So we've been focused there. We've also done a number of other procedures in other areas, so in colorectal, in plastics, in general surgery. What we've learned over the last 3 years is that there's a very significant opportunity for our Myriad products to be used in trauma surgery. And so we've put a lot more focus in trauma over the last year, and we see that as a great opportunity to continue to expand Myriad sales. Trauma is different from lower limb salvage in that lower limb salvage tends to be the high frequency procedures, but the value of the cases is relatively modest. Trauma cases tend to be less frequent, but they're very valuable cases for us. So we see the move into trauma as a way to increase our sales productivity, and it very much complements what we've done in the past. Now, what we've also seen with trauma is that our products are being used frequently in combination with negative pressure wound therapy. So this is the most common advanced modality used in wound treatment. We're seeing that the combination of Myriad and negative pressure appears to accelerate the rate of healing, reduce the number of interventions that need to be made with the patient, and reduce the amount of time and nursing experience that's required to intervene with these patients as well. So we see Myriad as being very complementary to negative pressure wound therapy. There's over 1 million negative pressure wound therapy procedures in the US every year. So we think it opens up a significant opportunity, and proving out the use of Myriad in combination with negative pressure wound therapy in trauma wounds really provides a springboard for us to expand into wider use at a wider range of wounds. We're also with Symphony targeting the opportunity for treating complex wounds like diabetic ulcers and venous leg ulcers. And this is a large existing market. There's over 475,000 of these procedures in the US, and this market is valued at over $1 billion. What's different about what Symphony can bring to this market is the rate of healing, our ability to provide wider access to an advanced technology for more patients. And we think there's a very significant opportunity for Symphony to be successful in this market. So the other big change with Aroa over the last 12 months or so has been our investment in clinical evidence. So clinical evidence is really important in medical devices in terms of driving adoption and uptake. It provides a basis that gives surgeons confidence that your products are effective for specific procedures. It helps you to show how different your products are in terms of the comparative effectiveness of your products versus standard of care or alternate products based on real data. It also provides the ability for you to demonstrate evidence about how your product saves the hospital money in treating patients. So on the back of that clinical evidence, you can provide some financial evidence to support the use of your products. It's also useful in terms of investigating new uses of your products. It's a useful way to engage with surgeons and establish profile for your company. It's obviously important for promotional activities and helpful in terms of informing your commercial strategy. So clinical evidence is critically important, and we're at a stage now where Aroa is beginning to get a lot of clinical evidence that's coming through to support the use of our products. And I'll just talk briefly about that. So if we look across all of our products and the use of Aroa ECM, we tend to see very similar themes across all of these products. So the first theme is rapid volumetric fill. So what we mean by that is it builds tissue very quickly, and that tissue is well vascularized and it turns into functional tissue. So that's a noticeable difference between the Aroa technology and other technologies in the market. Something that's also very distinctive is it's tolerated very well in contaminated fields and seems to be resistant to infection. So we now have quite a growing body of evidence, and commonly with these types of technologies, you do see quite a reasonable rate of infection. What we're seeing with the Aroa ECM-based technologies is very few infections post-operatively, which is infections associated with higher costs for hospitals and obviously for the patient, slower healing, and often it's necessary to have repeat procedures. So that's really important. And then also what we're not seeing is any negative inflammatory responses to the Aroa ECM as well. So just to talk briefly about the clinical evidence coming through. So, with our focus on trauma over the last year or so, we've already published a number of papers, but relatively small numbers of patients. We now have some larger studies that are coming through over the next year. So Myriad in combination with negative pressure wound therapy and Myriad use in trauma cases. So 2 studies here we expect to report out towards the end of this year with 40 to 50 patients in each of those studies. In lower extremities, we have a publication based looking at limb salvage and lower limbs. And this is a large study, so 130 patients. That's probably one of the largest studies that's been published in lower limb salvage. And so looking at the use of Myriad in lower limb procedures. So that's expected to be published mid-year. And then we also have our Symphony RCT, which is running. So the interim results for that will be published towards the end of the calendar year, and then full results in the second quarter of next calendar year. So quite a lot of clinical data coming through in the lower extremity area. And then we also have some other publications coming through. These are in procedures that aren't the main focus for us, but what they do is they do demonstrate the general properties of the material, and particularly its ability to be used in environments where there is a high level of contamination or complication, and demonstrate the resilience of the Aroa ECM and the lack of complications. So these studies we expect to publish through the course of the year as well. Just briefly on our TELA Bio business. So this is the hernia and breast reconstruction business. In terms of the market opportunities for these products, hernia, it's a $1.5 billion market in the US. Most of TELA's focus has been in complex ventral hernia and simple ventral hernia. More recently, we've added to their portfolio so that they're now able to begin to target the inguinal hernia market. So they've recently launched products specifically designed for inguinal hernia. In breast reconstruction, post-mastectomy, this is a large opportunity as well. So, that market certainly in excess of $400 million US. I want to talk briefly about the Enivo tissue apposition platform. So this is a novel device that's a combination of the AROA ECM material, which is implanted at a surgical site, which is connected to a catheter and a negative pressure wound care pump. So this is designed to close down cavities that are created during surgical procedures. And those cavities are known as dead space, and they tend to lead to complications where fluid accumulates in that space and delays healings, and all can lead to other complications. So this product fits very well with the procedures that we're doing now. It's a completely new class of product. We estimate that the market opportunity for this product is in excess of $1 billion. We have two of the components cleared by the FDA for this product. So that's the catheter and the negative pressure pump. We need the implant to be cleared before we release this commercially. So we are required to do some more work and some more studies to get this cleared. And we expect that will probably take us another 24 months or so to complete. So we're in a dialogue with the FDA on the requirements for this, and we'll update investors on that a little bit further down the line. I think with what the sales team has within their portfolio already, there's certainly plenty of opportunity now, and we see this coming along later to complement what they're selling now. Just want to quickly go back to talk about TELA Bio and our sales to them and how that's affected our result this year. So as I said earlier, we grew by 12%, which is obviously not the sort of rate that we expected to grow at. TELA Bio sales increased strongly over the last 12 months, but our sales to them declined. So that's now come back into phase. And so, we would expect their guidance of $70-75 million over the coming year there, which is growth of 30% or so. Would expect that OviTex, our sales to TELA Bio, grow at a similar rate over the coming year. So just in terms of our guidance for the coming year, so our revenue guidance is $80-87 million. So that's a 21 to 32% growth on last year. And we expect to make a normalized EBITDA of $2-6 million. So we are transitioning from that loss of $3 million last year to be positive this year. We'll be positive on an operating cash flow basis in the second half of this year. And by the end of the year, we expect to transition towards positive on a free cash flow basis. In terms of the key catalysts and milestones over the next year, we expect to continue to see strong growth for Aroa direct sales, TELA Bio to continue to grow strongly as well. Enivo clearance, we don't expect that over the next 12 months, but we expect to make progress towards that with initiating clinical studies and preclinical studies. Symphony, certainly we're putting more focus on Symphony this year. We have a pilot running with our sales team, selling both Myriad and Symphony together. We expect to expand that out to the whole team later in the year. I think our focus now on much more stronger focus on trauma over the next 12 months is expected to lead to an uptick in sales as well. So I think they're the key things. It's really about sales execution and continuing to focus on Myriad for our direct team, and then Tela continuing to have success with Overtex over the coming 12 months. So, Caitlin, I'm going to leave it there and pass it back to you for questions. Thank you.
Thank you so much, Brian. Thanks for such a great presentation. For those that have joined us in the midst of the presentation in the live webinar, once again, please feel free to put your questions for Brian in the Q&A box down below. But we have already got quite a few questions submitted, so I'll get right into it. So first of all, we have a question here. Can you give a little more detail on the sales team progress in the US? Is this becoming more cost effective? Have we reached inflection?
Yeah, look, I think that's absolutely right. I mean, we've seen year on year the sales productivity of the team improve. What we've seen when we first launched Myriad, there was quite a long lag between putting salespeople in place and then working through the process to get hospitals to stock the product, go through the value committee process, and begin to be able to sell. As we've gained more access into more hospitals, that lag phase has certainly shrunk down quite a lot. And so, we are seeing improvement year on year. And, we should see, good progress over the next 12 months in terms of, the sales team starting to, more people breaking even and more people transitioning from, what they typically do in their first year is, 200 to 300,000 to being in that sort of, 600,000, then on to 700 to $1 million in the third year. So certainly that trend is looking positive.
Okay, and another question we've got submitted relating to the US as well is, what are the latest updates regarding approvals in the US for new products?
Yeah, look, I think for the existing hernia, breast, and soft tissue reconstruction products, we're not really waiting on any particular approvals there to be able to sell the portfolio of products that we have. So we're in a really good place there. I think Enivo is the one product where we are pursuing approvals. And so for that, we will need to do an additional clinical study. It's likely to take us 24 months or so. So that has pushed out. Having said that, I don't think that's holding us back in terms of selling. We've got a lot of opportunity with both Myriad and Symphony, and certainly for the sales team, that's where our focus is at the moment.
Okay. And then another question. Can you explain the difference in sales strategy between in-house and outsourced, and the long-term costs of both from here?
Yeah, so we have two quite distinct ways that we're selling. So our partnership with Tela Bio, we're responsible for development and manufacturing. Tela Bio is responsible for commercial activities and clinical development in the US. So under that arrangement, for every $100 that Tela Bio sells, we receive $27 as our revenue. Now, that $27, we make a margin on that of 80 or so%. And so that profit from that essentially drops to the bottom line because we don't have sales expenses. So it's a very, very good arrangement for us in terms of providing the ability for us to invest in the company. It's having a outsourced sales team, if you like. You don't have the same direct involvement in sales. You don't have the same contact with customers. You don't have quite so much control. And so we also, because of that, we also have our own sales team, and we've put in place a sales team to focus on other areas of soft tissue reconstruction outside of the TELA arrangement. If you put in place your own direct sales team, that requires investment in it for some time before it becomes productive. And so we've now had our own direct sales team for 3 years, and we should see that team beginning to transition towards profitability over the next 2 years or so. So it is an upfront investment, but I think what you do get from that over time is obviously the ability to have higher margins, more control of the business, the ability to focus on a range of different applications outside of where those other arrangements are. So I think that's positive for the company as well. I think both arrangements have their own strengths and weaknesses, and having a blend of the two is helpful.
So, did you mention just then that you anticipate you'll be cash flow positive within 2 years?
We'll be cash flow positive at the end of the current financial year.
Okay.
Yeah.
And then we have a comment here. Endoform is performing great in Bangladesh, the hidden supermarket of Aroa ECM. Can you expand on this?
Look, we so 95% of our sales are in the US. So that's where we're really focused. Ex-US, we are selling in a range of countries. I think it's over 15 countries now. And so we're doing that through local distributors. And so we're certainly in India. I'm not particularly familiar with the situation on Bangladesh, but I do know in a lot of these other markets, we're having a lot of success with Endoform. We're able to bring a really advanced technology to the market where people aren't necessarily familiar with this sort of technology, and obviously have great outcomes. So I'm not surprised to hear that. I mean, it's obviously it's not a big part of our sales mix, but certainly the international part's growing.
Okay. And you mentioned a lot about, clinical evidence and how all your products are backed by the publications you guys do. How much do you guys invest in R&D?
Yeah, look, I mean, it's been sort of $10 to $12 million or so over the last few years. It's a split between new product development and clinical development. So if you go back over the last 2 or 3 years, we've had a bigger focus on new product development. This year, that's sort of switching around a little bit. So we're putting more focus on clinical development, to develop the clinical evidence. We feel like we've got a strong enough portfolio. So now it's much more focus on clinical development to help support the sales of our products. So we are seeing that transition now. We will see, the product development cost stay relatively stable, and it should stable on a absolute dollar basis. And it's at the moment it's 20% or so of sales. We expect to see that transition down to be 10% of sales over the next 2 or 3 years.
Okay. And in your presentation, you mentioned that your products are better than the other competitive technologies out there. Could you expand a bit more on the competitive market?
Yeah, so in each of the different market segments that we are selling in, there is a different set of competitors and a different set of products. So you sort of have to look at them market by market. I think if you broadly, there are differences with how the Aroa product perform compared to competitors. And the main differences are around rate of tissue formation, rates of complication, and particularly the resistance to infection. So they are the main differences. I think if you then get a little bit more specific and you look at something like hernia, for example, in hernia, what's really important is lack of recurrence of the hernia after surgery. And in the procedures where OviTex has been used, hernia rates can be between 10 and 30, recurrence rates can be between 10 and 30%. What we're seeing with the OviTex products is recurrence rates less than 3%. So it's a profound difference compared to what's historically been seen. In trauma, in lower limb procedures, we're now starting to generate the evidence that there's differences there. And I think in those procedures, it's going to be much more around rates of complications, rates of infection, and time to healing, the time that a patient's in hospital. So, that information, and I don't want to, I won't kind of preempt the publications coming out this year, but the publications that come out this year will help to demonstrate the differences between the Aroa product and competitors.
Okay. And a question we have submitted. Are the directors and other large shareholders disappointed with share price performance? What is the market not understanding about the company and its prospects? Is it the time frame it's taking the company to become profitable? What other factors?
Yeah, look, I think certainly the management and company generally, directors, we are disappointed with how the share price has performed. I think there's a number of factors that play into that. I think the downgrade in guidance this year has affected the share price. That's a direct consequence of the lower level of sales through to TELA Bio. I talked about that earlier. We see that as a temporary reset in terms of inventory levels. We're now back onto we were much more synchronized. We'd expect that to come right in the next 12 months. So I think probably what people, the key sort of thing to look at really is the rate of adoption of Aroa's products in the market. And if you look at the rate of adoption of OviTex, the rate of adoption of Myriad, I think the signs there are very positive. And so I think maybe that's something that the market's missing. Probably looking directly at the Aroa numbers alone don't really give you a full picture of what's happening in terms of product adoption.
Yeah, okay. We had another question here. Can this webinar recording link be shared to attendees? Yes, we will upload this onto YouTube for those that missed the webinar. But other than that, let's wrap it up here. Is there anything else you'd like to add, Brian, before we finish?
Yeah, I think the key thing for Aroa at the moment is that we're at an exciting stage. We're making that transition to be both a high growth company based on top line, but also transitioning to being profitable. The company's got a strong balance sheet. It's well placed to continue to expand over the short term. So yeah, I'll leave it there, and thank everybody for joining, and certainly for existing shareholders, for your ongoing support.
Thank you so much, Brian, and thank you to everyone for joining. Just to repeat again, yes, this video will be uploaded to YouTube, and if you have further questions for Brian, I'm more than happy to pass them on to him. But thank you so much, Brian, and thank you, everyone.